First Brands Group has filed for bankruptcy protection while disclosing more than $10 billion in total liabilities, marking one of the most spectacular collapses in private debt markets in recent years. Monday, September 29th, 2025, Maneco 64, home of alternative economics and contrarian views. So could the credit markets be unraveling? We've got some very interesting and worrying news overnight. First Brands filed for bankruptcy Sunday night in Texas, threatening multi-billion-dollar losses according to the FT. And we also seeing comments by Eric Trump, for example. Peter Schiff posted this yesterday, saying Eric Trump predicted the Fed will soon return to QE. And he says if Eric believes this, chances are his father does too. This says a lot about the president's plan for the Fed, his knowledge of the true underlying weakness of the U.S. economy, and why the biggest risk is soaring inflation. Well, I'm not sure Eric Trump and Donald Trump think that, but I agree with Peter Schiff. And yes, is it any surprise that gold and silver are continuing to surge this morning? And to be honest, I could see gold easily at 5,000 by the end of the year. Yes, that's how serious things are. And why do I say that? Well, because even investment banks like Goldman Sachs said that if Trump kept pushing the Fed and kept infringing on its independence, so to speak, that gold could easily go to 5,000. And we saw Trump posted, I think on Saturday, this cartoon on his Truth Social saying, "You're fired," to Jay Powell. So I think things are getting very interesting. So yeah, I made a video, I think it was on the 25th, so not long ago, less than a week ago, entitled "The Shadow Banking System is So Fragile That Even the ECB is Concerned." And in that video, I spoke about Tricolor. I think it's an auto parts or auto financing company that collapsed beginning of September. And in the article in the FT that I covered, it talked about First Brands. It hadn't collapsed yet, but yes, it's declared bankruptcy. And this is quite serious, I think. It goes to show that the private, not just private equity, but private debt market is very opaque. It's a little bit like the OTC derivatives back during the great financial crisis, Lehman collapse, subprime mortgages. No one really knew what was going on. Not even the New York Fed knew what people were doing, because these OTC derivatives and these private debt and equity transactions are not like publicly scrutinized. They're not in the public market. So let's go through this First Brands article because it's quite serious. Not the whole thing, but the important part of it. And you realize that I think there's a lot of panic within the Federal Reserve. And I think this is one of the reasons why gold and silver are rising so fast, because of credit worries, but also because I think the Fed will be pushed to stop the QT, because they're still doing QT, even though I've looked at some numbers and the balance sheet is actually gone up in the last month, and we'll look at that in a minute. But it says here, so this is 2 hours ago, and I'm speaking at 7:20 a.m. London time. It says First Brands Group has filed for bankruptcy protection while disclosing more than $10 billion in total liabilities, marking one of the most spectacular collapses in private debt markets in recent years. You might say 10 billion is not much, but it could be just the tip of the iceberg. There could be many other First brands out there that we don't know of. The Ohio-based auto parts company filed for Chapter 11 protection in the Southern District of Texas late on Sunday, formalizing the abrupt unraveling of a business that has borrowed billions of dollars in private markets and raised concerns over riskier lending on Wall Street. In its bankruptcy petition, First Brands, which is owned by Malaysian-born businessman Patrick James, did not disclose specific liabilities, but estimated they were in a category, listen to this now, between 10 billion and 50 billion, while it puts its assets at 1 billion to 10 billion. So interesting that they didn't have to disclose the exact amount, but I would bet that it's closer to 50 billion, their liabilities, than it is to 10, and that their assets are closer to 1 billion than they are to 10. Full details of its finances could take time to emerge, given the chaotic nature of its descent into bankruptcy, which was fueled by concerns over its use of off-balance sheet finance. Well, that's kind of like derivatives, off-balance sheet. They didn't reform the derivatives market, did they, after the Lehman collapse and the great financial crisis of '08? And why didn't they do that? Well, because Wall Street has captured Washington, and Washington does whatever Wall Street wants because they give them money. They give the politicians money. First Brands previously told lenders it had $5.9 billion of long-term debt in March against nearly $1 billion of cash, but many creditors now fear there are billions of dollars more in opaque finance linked to its invoices and inventory. This is the other part that's interesting here. It says Sunday's petition listed several specialist investment firms as creditors with exposure to First Brands' so-called factoring invoice financing, including an asset management unit of U.S. investment bank Jefferies. So Jefferies, I looked it up. It's not a huge company. The market cap is 13.7 billion. So we need to keep an eye on this company, Jefferies, to see what's going on. This could be it could be the little snowflake that triggers the avalanche. And it's happened like a month ago. People thought First Brands were fine. The same thing with Tricolor. So it moves very quickly. I guess it's the old quote or scene from a Hemingway book. The person asked someone else, "How did you go bankrupt?" And the guy said, "First it was gradual, and then it was sudden." So I want to show you the Fed's balance sheet. The Fed right now is supposed to be unwinding the balance sheet, doing quantitative tightening. But as you can see here from the end of August 27th, so about a month ago, balance sheet was at $6,603,384,000,000. The latest number from the 24th of September, so about a month, that number is a bit higher now. It's $6,608,395,000,000. So you kind of wonder if the Fed will have to halt QT, and as Eric Trump has been speculating, they're going to have to to go with QE. And every time since 0809 when QE started, every time they come back to QE, it's even bigger, the amounts they have to do. And that's not surprising. I've been warning about this since I started this channel, mainly because reading through history and like especially what happened in revolutionary France with the issues of assignats, you will see that, and I recommend that book, Fiat Money, Inflation in France. There's free PDF online. I'm going to put in the description, and it's not long. And it shows like, yeah, the National Assembly in France said, yeah, it's not great to do this. We know what happened in 1720, the Mississippi bubble, but we're only going to do one issue and then the economy will kickstart again. The problem was that, yes, it helped, but then the effect waned. And then they had to do even more, and it kept snowballing. And it's the same thing that's going to be with QE. And I think what gold is doing, and silver also, they're telling us that the system is in trouble, that people are rushing to protect. They want something without counterparty risk because the credit market is under pressure. I even said last week when I spoke about this that the ECB is even looking at that. They're concerned. So yeah, gold is forecasting this, I think, that credit markets are in trouble. So people want to have some physical gold and silver outside the system, but it's also forecasting that the QE will have to come out, the bazooka, Jay Powell's bazooka, or you could call it Trump's bazooka now, because it seems like Trump and his administration and the Treasury are more and more in charge of the Federal Reserve. Is that a good or a bad thing? To be honest, I don't care. The ideal situation for me would be no central bank, because in a supposed free market capitalist economy, you don't need a monopoly central bank. Banks that are in trouble, they should fail. That's been the problem for too long. People have been bailed out and helped by the central bank, and the people who suffer, of course, are the general public. And talking about bailouts, it looks like the UK government is back to bailing out companies. They bailed out Jaguar Land Rover with a £1.5 billion pound loan. Why is that a bailout if it's a loan? Well, because it shows that the private market doesn't want to lend it to them, because the company is probably, like First Brands, insolvent. They shouldn't be in business. And the other thing about the UK that I read is that the Labour Party, like the backbenchers, so to speak, and the people that are members of the Labour Party, they're calling for Rachel Reeves, the Chancellor, to borrow more and spend more, to be less austere. And I think that's going to put a lot of pressure on gilt yields. That's going to put a lot of pressure on the pound, even though the dollar is down a little bit this morning. What else is there? Well, let's look at gold and silver, what they're doing. I said I wouldn't be surprised if gold reaches 5,000 before the end of the year. That might sound outlandish, but it isn't. Back in 1979, gold was trading around 400 in November 79, and by January it traded up almost to 900. So gold more than doubled in a period of 2 months. So for gold to go to 5,000 wouldn't even be doubling. And silver, overnight we traded above 47. So the high's been 47.18. I said on X a few days ago when we broke 44.20, which was a level I was looking at, that there wasn't any resistance now until 48. And I think that's where we're going. I wouldn't be surprised if we go to 50 this week. That will be really interesting. It's interesting to be alive and see silver try to break 50 for the third time in 45 years. And why do I say that? Because I think it could be explosive. And that's what I said in my video on Saturday. I'm going to put it up here in the cards if you haven't watched it yet. What about gold? Well, gold traded up to 38.18. That's the spot price. We're now at 38.12, up over 50 bucks. So something's definitely going on there. The Dow futures is up 150, which is weird, isn't it? Very weird. But I think it's still early doors here in Europe. We need to wait until maybe 8 a.m. London when people start coming in, not just in London, but also in the continent, on the continent. We've got the NASDAQ up 0.5%. NASDAQ futures, S&P is up about a third. It's trading at 6,668. And as I said, the dollar's a little weaker. The pound's up 0.25%. The euro's up 0.2%. And the dollar is down about 0.5% versus the yen. What about some other currencies here? It's been a while since we look at the other currencies. We got the Aussie dollar up a third. That's not surprising. Aussie dollar doing well here, with commodities doing well. Canadian dollar is down slightly, about 0.1%. What about the Kiwi dollar? Let's see, Kiwi dollar is up 0.25%. And WTI crude looks pretty firm. I mean, it's trading around 65. It is down 0.8, but from what I've seen in the last few months, it's been stuck here in the low 60s. So we are in the mid 60s. It's that inflation problem Peter Schiff is talking about. High-grade copper is doing well. That's up 0.2% at 482. And we're seeing a little bit of a rally in treasuries. Maybe it's because of the credit markets being in trouble. People want treasuries, not so much the corporate sector. So the 10-year yield is down 3.5 basis points at 4.15, and the 30-year is down about 4 at 4.72. So with that, I'm gonna wish you all a great start to the week. Take care. Bye.